Good morning, ladies and gentlemen. It's my pleasure to welcome you back to the Peterson Institute for International Economics for our conference of substance and engagement on Abenomics. Are we making the transition from macroeconomic to structural reform in Japan? It's my pleasure to also say that we're partnering with the Sasakawa Peace Foundation USA on this, and I'll say a bit more about that later. We're very excited by this conference. We have, when we last worked with Sasakawa Peace Foundation, we did a very useful and I think cutting-edge conference in February on the economics of Abenomics when very few people in Washington were giving it serious consideration. It was very dismissive. And with the help of Sasakawa and our own network, we had Hamada Koichi and Ito Motoshige, two of the key economic advisors to the Abe government, as well as Jeff Schott and myself, and a colleague from the IMF. And we were able to really go through some of the challenges and opportunities that the Abe administration faced at that time, including in the trade area and the monetary. Since then, for good reason, Abenomics, including Japan's entry into TPP, the Bank of Japan's aggressive monetary action, and the decision to go forward by the Abe administration with the consumption tax increase have brought home that Abenomics at least means something substantive. But now we are on the question of, can you make the transition from the sort of correcting the macroeconomic mistakes of the past into a more positive environment, to make the transition from that effort to the effort of raising Japan's potential growth rate and reforming itself structurally, both as part of the internationalization of Japan in the trade realm and with specific reforms domestically. Since our conference in February, a lot of people have gotten on the bandwagon in Washington. Many of our sister and brother think tanks have done their own events. We are very proud today, as usual at Peterson, to have what I believe the best substantive group for discussion. We're honored to have with us as our luncheon speaker Norihiko Ishiguro, the Vice Minister for International Affairs from METI, who's going to try to pull together TPP and Abenomics. We also have speaking on our second panel, Deputy USTR Wendy Cutler, a friend and colleague of many in this room for a long time, who's deeply involved in the US-Japan and TPP negotiations. But also on the macro side, we're delighted to have Dr. Gerald Schiff, from Deputy Director of the Asia Pacific Department of the IMF, Mr. Takashi Imamura from Marubeni Corporation, who brings a business person's perspective, and Professor Yorizumi Watanabe from Keio University, who the Sasakawa Peace Foundation generously brought to give us his insights. It is not often you see another banner besides the Peterson one on the stage, and it is always by our choice of partners. And we're delighted to be partnering with Sasakawa Peace Foundation USA and the Sasakawa Peace Foundation itself, based in Tokyo. As many of you know, this is a very large foundation, a very important foundation that's been working on many issues regarding Japan's role in the world, with a particular interest in promoting US-Japan relations and having US-Japan collaboration on global issues. Their collaboration with the president of the Foundation USA, Junko Chano, and our close colleague, Daniel Bob, the senior director of US-Japan programs here in Washington, their partnership with us is enabling us to really grapple with these issues and bring the right Japanese people here as well for discussion. And I'm grateful to the Sasakawa Peace Foundation for doing that. Let me just introduce our friend Daniel Bob, who is also a senior fellow at the Sasakawa Peace Foundation. Many of you know him from his time on Capitol Hill as a notable advisor on Asian economic affairs at the Senate Finance Committee and the House Foreign Affairs Committee. He's been an International Affairs Fellow of the Council on Foreign Relations. Importantly, he's devoted much of his professional career to the substantive improvement of US-Japan relations, including as the founding director of the Congressional Study Group on Japan, helped develop the Mansfield Fellowship Program, was an advisor to Japan's Diet Constitutional Research Commission, and was a member of the group that produced the Armitage Report, which still has important implications for U.S.-Japan security relations today. So I'm delighted to have Dan with us today. Please.
Thanks so much, Adam. Really appreciate that introduction. We at SPF USA and Sasakawa Peace Foundation really are delighted to be cooperating with the Peterson Institute on our second Abenomics seminar, as Adam mentioned. We did do the first one in February, just after the Prime Minister had initiated his very ambitious economic plans, and we thought 9 months later it's really a good time to take an assessment of how things are going and where things seem to be headed. And of course, the first 2 arrows of the 3 arrows that the Prime Minister has as part of his plan were launched earlier in the year, the fiscal and monetary side of things. And Japan is showing some positive signs. For example, annualized growth in the first 2 quarters of this year were 4.1% and 3.8% respectively. Unemployment's down, bank lending and domestic demand are increasing, land prices are rising, and confidence is up. And I think most would agree that those were, the first 2 arrows, the monetary and fiscal aspects, were critical in and of themselves, but in a sense, they are also a means of buying time for the sustained growth that's promised by the structural and regulatory reforms of the 3rd arrow. And that arrow essentially has yet to be launched. It is, of course, the toughest arrow because the changes that will be required are going to be resisted by some very strong vested interests. There was a prime minister you may have already forgotten, but 2 prime ministers ago, a man named Naoto Kan, in talking about the reforms necessary as part of TPP, which are very much embedded in the 3rd arrow, he compared those reforms to the 3rd opening of Japan. In other words, the impact of those reforms would it be comparable in some respects to the enormous changes that took place in Japan during the Meiji era, and then secondly, right after the World War II. That might overstate the case slightly, but there's no doubt that to get these reforms through, there will have to be a great deal of political skill exercised and some real political strength shown. Mr. Abe seems to have learned tremendously from his first time as Prime Minister and is really at the top of his political game. He also has the benefit of an extremely strong political hand, arguably, I think, the strongest in 2 decades. He's got control of both the upper and lower houses. He has high approval ratings that have been sustained over the year. He has no election, essentially, to worry about for another 3 years, and he has no viable opponent within the LDP to challenge him. And moreover, TPP offers an additional impetus for some of these reforms through what's called gaiatsu, outside pressure. Of course, that means that TPP would have to be completed sooner rather than later. But the Prime Minister does seem determined to make the reforms. For example, at the recent APEC meeting, he said, and I'm quoting here, "What we need is a powerful drill bit and a sturdy blade to break through the rock-solid regulations. I have vowed to become that drill bit." Sort of interesting imagery, I'd say, but it does convey that he really does mean business. That said, the reform proposals that have been put out so far seem a little bit short on detail, rather longer on aspiration. And a little more troublingly, in a few of the more contentious areas, he seems to already have been pulling back a bit. For example, when it comes to relaxing labor laws and easing online drug sales. In any case, this is a fascinating time in Japan, and as Prime Minister Abe famously said on his first visit here earlier this year, Japan is back, and I think that's certainly the case when it comes to the headlines as well as to the policy discussions here in Washington, including right here at Peterson Institute. We have some really terrific speakers, as Adam said, and on behalf of Junko Chano and the Sasakawa Peace Foundation in Japan, as well as Sasakawa Peace Foundation USA, we're really pleased to be working once again with Peterson Institute, and want to thank Adam and his staff for all the terrific work they've done. Just to let you know, Junko Chano is arriving right about now, and she'll be joining us a little later. So with that, let me turn things back over to Adam.
Thank you, Dan. It's always fun when the partner says the blunt things about the politics, so I don't have to. That was great. I'd now like to call our first panel. We're delighted to have James Fothery, president of the U.S.-Japan Business Council, to chair it. He'll introduce the panel. And just to note that we're coming up on, I believe, the 50th anniversary of the U.S.-Japan Business Council. We've got some very important events coming up, which I'm proud to be participating in with James, and I know you'll all be aware of that in coming weeks. So, James.
Good morning. James Fothery is my name. As Adam said, I'm president of the U.S.-Japan Business Council, but also the senior director of the Japan and Korea teams at the U.S. Chamber of Commerce. It is my distinct pleasure to introduce our first panel, which is focused on Abenomics from macroeconomic to structural reform. We have the aforementioned and esteemed Adam Posen on the panel. You all know Adam is the president of the Peterson Institute, but clearly he is world-renowned as a monetary policy expert through his work with the Bank of England Advisory Committee over the previous 3 years. He has worked on Japanese macroeconomic issues for a number of years, going all the way back to the late 1990s, focused both on monetary policy and fiscal policy. I don't think I need to say anything more about Adam at this point. Our second panelist is Dr. Gerald Schiff, who is the head of the Deputy Director of Asia Pacific at the International Monetary Fund. He has primary responsibility as mission chief for Japan and Singapore at the present time, as well as oversight on some of the work that the IMF has been doing on Myanmar and the ASEAN nations. Previously, he was senior advisor in the office of the managing director of the IMF. He has also held other senior positions in the Asia Pacific department at the IMF. He's got his PhD in economics from the University of Wisconsin and undergraduate degree from Cornell University. Last but certainly not least is Takashi Imamura, who is the vice president and general manager in the Washington office of Marubeni Corporation. I'm sure you all know Marubeni is a global trading company. Their Washington operations are focused on working on policy issues, gathering information, disseminating it throughout the Marubeni network around the world. It is a global entity, to be sure. He has been in this position since 2008, and prior to that, he was the head of Marubeni's Economic Research Division. So he is someone who's not just a businessman, but he is someone with a deep background of experience in analyzing economic events, both at the macro and the micro level. And he is billed as one of Japan's most knowledgeable and insightful political and economic experts. So with that, we'll turn to the discussion. I will field questions after the panelists conclude their presentations. When we get to that stage, I'll offer instructions then. Thanks very much.
Thank you, Jim. I guess I'm up first, and I'll skip the thank yous since I already did them. What I'm going to do is try to give you a brief précis before my colleagues sitting to my right, who are at this point much more deeply enmeshed in the reality of Japanese reform than I am, the detailed reality, that is. can fill in. So I'd like to make 4 points. The first is that the glass may only be a quarter full, but that may be enough. The second is that the Japanese economy is not as desperately thirsty for reform as some would have it, meaning that a quarter glass may be enough for another reason. The third is that the issue that I think Jerry is going to talk about in particular, female labor force participation, is to me the most critical of the reform efforts and is the place where we really do have to, besides TPP that is, the place where we really do have to keep the Prime Minister's feet to the fire. And the fourth is picking up on something Dan Bob said, that I think there's a positive interaction between the monetary and fiscal measures they've taken and the success of the macroeconomic structural reforms to come. So on the first point, the glass may be only a quarter full, but that's enough. There are many people in this room, and there are many more people around Washington who have been through the wars, as it were, not really wars, but through the years with various demands, suggestions, pleadings, advice from the U.S., from the OECD, from the IMF, from the world at large on how Japan should reform. And people both in Washington and Tokyo who have been frustrated through the years saying, oh, they didn't really do this, or they said they were going to do this and they didn't do that. And I would like to think that after the events of the last few years that U.S. and Europe and many other people are significantly chastened in their ability to say that. Not just as a matter of diplomacy and not just because we've already had this embarrassing combination of budget disaster in the U.S. and messed up healthcare rollout, or in Europe, the force majeure being imposed on a number of southern debtor countries only to be told that you're not reforming enough. I think it's important to recognize that Japan started off growing after the crisis was alleviated by Koizumi and Takanaka at a per capita rate from 2002 to 2008 that exceeded everyone else in the G7. And because, as we know, the Japanese population was shrinking, and workforce, rather, was certainly shrinking over this period, that was all productivity growth. There was a little bit of it that was deepening from catch-up capital investment, but as we know also, investment has not been all that high. It was primarily productivity growth. And so that doesn't mean there aren't 10,000 things to fix in the Japanese economy, but it does mean that we do not have a fundamental breakdown of the ability of the Japanese economy to produce innovation, to adapt to global conditions, to create gainful employment. And so when we think about, is it enough, a quarter glass isn't enough, I would argue that it may well be enough for now. More is better. More reform is better. A fuller glass, more rapidly drunk of reform would be better. But the idea that there's some enormous minimum that the Japanese government has to get through to get Japan on a sustainable positive growth path is, I think, misplaced. And that the standards by which we judge whether or not the Abe government or whoever in Japan is doing reform have tended to be excessive and excessively cynical given the experience of reform in other countries. And so this is not an apologia, this is not to say everything's fine, but it is to say I think we need a different perspective when we say, oh, it's just a few 100,000 female workers, oh, it's just a partial liberalization of agriculture under TPP. Anything is helpful and good. Which leads to my second point about a quarter glass may be enough in a different way. How thirsty are they? There is, and my colleague from the IMF may disagree, but there is, in my view, a greater room, a slightly wider path to fiscal sustainability in Japan than many would have. Now notice I said slightly wider. This is not an 8-lane autobahn that you can putt along all over the place and get to fiscal stability. But it isn't quite the narrow tightrope going to a drop in the immediate future that many would have spoken about Japan. I've written about this extensively, as have many other people. Given the enormous domestic savings in Japan, given the very small foreign holdings of any Japanese assets, let alone JGBs, this is a surmountable problem, and particularly given the fact that net debt is 140% of GDP roughly, rather than 260. Now, again, 140% of GDP is a little much. And that is a situation that constrains you so that you do not respond well when, God forbid, a tsunami and a nuclear accident comes. It is a situation that constrains some of the public investment, or even, according to some, military spending you might want to do in Japan. So it is not without costs, but it is not an imminent flashing light that Japan is about to hit the wall. And so the macroeconomic environment, particularly on the monetary side, I think importantly influences the ability of Japan to pay its debts. And now that the Abe government is going forward with the tax increase on consumption, I think that they're not all the way to sustainability, but a sustained positive inflation rate without a one-for-one rise in long-term bond rates, which is what we've got and which is what I forecast and which is likely to persist, combined with some growth, will get you on a path that is sustainable. I think you probably will have to think about an increase in taxes further. You'll need national ID cards. You'll need consumption tax going up towards 15 or 17%. But that's all within the realm of possibility. That is not insurmountable. My colleague Bill Klein has done some very interesting work on debt sustainability, and I've asked him to start taking a look at using his new apparatus to look at Japan. And I think, as he discovered with Italy, the actual sustainability of the debt, while worrying, is much less bad than you think. So my third point, as I mentioned, is to stress the labor market issue. I also believe the integration of Japan with the global economy provides huge opportunities and will cause huge changes in Japan. We've all been on that saw for a long time. The TPP is for real. I will leave it to my colleague Jeffrey Schott and the others on the second panel to discuss that. But as I've been saying for some time, and again, I commend the IMF, has been out there in front on this issue very strongly. Female labor force participation in Japan is the ultimate found money. You know, of all the reforms out there in Japan, this is the one that is a 50,000 yen note littered on the streets, and you just have to bend down and pick it up. Now, obviously, there's a little bit of a cultural issue here somehow. And I'm not going to presume to talk about that, except to say that sexism doesn't pay. And we have to state that very clearly in economic terms. Some of you may recall a month or two ago, we had an event here about women in economic growth with Heidi Krebo-Redeker, Manoush from the IMF, and Carly Fiorina talking about this in the broad, and this is obvious in Japan. Were you to mobilize even a quarter of the college-educated women over the age of 30 in Japan who are capable of doing more productive and more full-time work than they're now doing, that would more than reverse any decline in the workforce for at least a decade. And that would immediately materially improve Japan's fiscal situation. And so I think Jerry and his colleagues have much deeper analysis than I do about this in technical terms, but we should not lose sight that that is the treasure sitting there in Japan. You've had almost parity in educational attainment between women and men for now a few decades, and this is just simply the untapped resource. And it could be totally transformative. When the Prime Minister said he was going to put up money for more child care, that was an important first step, and some people groused, oh, it was only, I think, 100,000 or something. That's a big number. But if he backtracks, if the Biden administration backtracks on this more than any other structural reform issue, we should call it out. So my final point is to think about the interaction between macro and structural reform policies. And we have framed this conference, Sasakawa and us together, framed this conference as this transition from the sort of, I don't want to say easy, but clear initial steps on the monetary and fiscal side into the more detailed, difficult steps on the structural side. our old friend Ito Takatoshi has started saying that the third arrow is not really an arrow, it's a flight of 1,000 daggers, because you've got to get each little spot in the structural reform. All I want to emphasize, and this picks up on something that we discussed yesterday after a presentation by Jacob Kierkegaard on the success of labor market reform in Germany, that you can do more reform and have reform more accepted by workers, both politically and in terms of changing their behavior, in an expansionary economic environment. We have this notion, particularly in Europe, that governments won't act unless their back is against the wall. And various people, including Jacob, Fred Bergsten, Anders Asland, and others in this building, have made very reasonable predictions that were proven right about Europe with that in mind. But we also know from Europe and elsewhere, from the welfare reform in the US in the mid-90s, from the hard-sphere labor market reforms in Germany in the early 2000s, that that's about moving the politicians. Once the politicians move, the essential issue is to get the jobs out there so people respond to the incentives that you've changed. And as Dan very nicely summarized, the Abe government right now has a political path before it that is as unencumbered as any Japanese government in, I won't say in living memory, but in a very long time, and one that President Obama could only dream of. And so therefore, I think it is right that we are talking about, and here I'd be very interested in remarks by Mr. Imamura, about making sure that Japanese workers get an adequate wage settlement in the first quarter of 2014, so that when the consumption tax rise goes through, which will inherently slow the economy temporarily, it is not enough to set back reform, both politically and in the sense of people being prepared to move into new opportunities. And I think it is okay to take a page from an old book of corporatism or tripartite bargaining from Europe and say it is reasonable to try to target a positive wage rate after the profits that have accumulated in Japan in the last year or two with the move of the exchange rate. So let me end there. The glass is pretty full.
Adam, thank you very much. We now turn to Dr. Gerald Schiff.
I'll go from here. Yep. Just so you know, we can see the PowerPoint.
Got you. Thank you.
Thank you very much. Thanks for having me at this event. I'd like to just pick up on a few of the themes that have already been mentioned by Daniel and to say something about really where we see the economy now in a bit more detail, and to talk a bit about how we see the policy requirements going forward, and with a focus, as was mentioned, on a female labor force participation and labor market duality, which we see as closely linked. The bottom line for us is not very different than has been mentioned already so far, which is that Abenomics is off to a good start, but in some sense, the hard work remains to be done. We think that the key actors, consumers, firms, financial institutions, still need a bit more convincing before they will go ahead and do the sorts of things we'd like to see: higher investment, higher wages, portfolio rebalancing by the banks. So they're sort of poised to do those things, but they haven't yet done them in a complete way. And so the ongoing debate now in Parliament about the growth strategy really is quite critical. So let me turn to some of these issues. To talk about where Abenomics is and whether it's succeeding, I think we need a sense as to what the baseline would be. In other words, what would we have expected to happen by now under a successful scenario? That's a little bit difficult because there's not a good model for what Japan is trying to do. But I think that, it's clear that certain things were expected. Let me just scan through this fancy thing here. I mean, initially we would have expected to see a stimulus-driven recovery, followed by a pickup in inflation and inflation expectations, and portfolio rebalancing by financial institutions as a part of that process. And then later on, not exactly clear how much later on, we would expect to see that stimulus-driven growth be replaced by a more sustainable private demand-led growth, and over a slightly longer time period to see potential growth rise via structural reforms. So how are we doing relative to that baseline? Well, this chart shows the development of some of the key macroeconomic indicators in the first 2 quarters of the year relative to IMF projections just prior to the announcements that we now take together as Abenomics. And you can see that in all cases except for corporate investment, growth has been stronger than had been projected previously. In other words, Abenomics in that sense seems to be working, but much of this is stimulus driven. Obviously public spending is, private consumption is to a large extent as well, because it's generated in large part by wealth effects from the run-up in the equity markets. Exports, of course, partly reflect the depreciation of the yen. More recently, high-frequency indicators are broadly positive. Not entirely so, but the big picture is that growth seems to be proceeding quite well. The third quarter GDP, the first estimate of which will be announced in a few days, will probably be a bit slower than the first half of the year, but we are looking for a rebound in the fourth quarter, and initial data for September on industrial production and retail sales, for example, have been quite strong. And at this stage, the consumption tax begins to make analysis of the data a bit more complicated, because we expect to see consumption pushed forward in advance of the consumption tax, and then with payback following the initial round of consumption tax hikes in April. Inflation has been rising, and while that partly or largely so far reflects the exchange rate movements and the higher energy prices that you can see on the right-hand side, I think it's very important to note that core inflation is now no longer negative. It is almost precisely 0, which is a major victory in the Japanese context. Inflation expectations, which are critical for Japan at this moment to drive inflation, given that traditional monetary transmission mechanisms may not be that strong. Inflation expectations have also risen. We can see on the left-hand side some market-based measures of expectations are sort of between 1 and 1.5% of GDP. And on the right-hand side, we can see that the consensus forecasts, this says GDP growth, but it should be inflation, have also risen over 3 successive publications of the consensus forecast. So inflation expectations are rising as we had hoped, but not yet at 2%, or not that near 2% yet. And so this suggests that so far markets remain skeptical of the BOJ's target, but not in general of the idea that inflation will rise. We think that a key both for getting inflation to where we want it to be and for sustaining consumption, and this is a point that Adam made, is for wages to rise. We have seen a tightening in the labor markets. You can see that the vacancy over applicant rate has increased quite steadily, pointing to a tightening in the market, but basic wages, what's called here scheduled earnings, have been almost completely flat. So employers have responded to the tighter labor markets with higher bonuses, more overtime, but not yet with basic wages, which would be more effective in driving consumption and supporting inflation expectations. As Adam pointed out, in April there are the annual wage negotiations, and those will definitely be key. And there are some early indications. Some of the major firms in Japan have indicated a willingness to perhaps raise nominal wages. Investment has picked up, but so far it's been mainly in the non-manufacturing sector, domestically oriented firms, and it would be important to see that extended to some of the big, more export-oriented corporates. And portfolio rebalancing has so far been limited. Banks have, at least a few of the major banks have reduced their holdings of JGBs as hoped for, but that has been paused, and most of the cash has been parked at the Bank of Japan in reserves rather than being lent out, although more recently we have seen a pickup in lending and credit growth is positive. Another point, picking up on something Adam said, is to look at corporate retained earnings in Japan, which have risen very sharply and steadily since the late 90s, and now compounded or supported by the yen depreciation. And so these firms have not been doing much in terms of investing. They haven't been paying out dividends, and they haven't been giving out large wage increases. So if you want to be optimistic, you can say that there is scope to somehow make use of these locked away savings to support growth in Japan. So basically where we are is, in our view, is that the first stage of Abenomics has worked quite well. The stimulus-driven growth has been as roughly as expected, but now there's a need to move ahead with structural reforms, with fiscal reforms. I agree with Adam that we don't need major adjustment now, but I think that what we do need is a very clear plan about how adjustment will take place over the medium term. The chart on the right-hand side illustrates, under our IMF projections, that the large positive growth impetus from the government, from government spending, will become negative over the medium term, and that needs to be replaced by more rapid private sector growth. So, and I think that while what's happening in the diet right now, the discussion of the growth strategy, is mainly going to have an impact on the medium term, it will also, through expectations, have a potentially large positive effect right now when key players, firms, financial institutions, consumers are all sort of poised to do what we wanted them to do under Abenomics, and perhaps just need a bit of a push. Let me just spend a few minutes on one particular structural reform, again picking up on Adam's initial remarks, and that is on labor reform, labor market reform. We can see that potential growth has declined, as everybody knows, over time in Japan, and that's to a large extent because of the decline in labor input. That's the red line that you can see is negative since the mid-1990s. That's likely to continue. The labor force is likely to continue to, the working age population is going to continue to decline, and that will continue to press on potential growth. That sort of demographic effect has been compounded by Japanese policy. You can see on the right-hand side that Japan scores very poorly, both in terms, or very low, both in terms of the share of foreign labor and female participation rate. Immigration reform is probably a long ways off, so we have been focusing on the second issue of female labor force participation. We've done some fairly simple calculations of what kind of impact higher female labor force participation could have. The blue line is our baseline growth. The red dotted line shows what growth could be if Japan raised its female labor force participation to G7 averages, and the black line indicates what would happen if they were able to raise their participation rate to the higher Northern European rates. And you can see that this would make a sizable difference of about 0.2 to 0.4 percentage points per year, and about 4 to 8% higher GDP over the medium term. This is not unprecedented. Some countries have seen these sorts of increases, and for example, we can look at the Netherlands in the last several decades. But how would we do this? Our view is that there's no one measure, especially given the cultural and demographic factors. There's no one policy measure that would unlock this, but we think that a package of measures could go a long way. As was noted, the government has been focusing on raising childcare, and this will certainly be important. In Japan, female labor force participation for young women in their early 20s is right around advanced economy averages. But by the time women reach their late 20s, participation rates are much lower. And this is in part because of the high cost of childcare and the inability to access, for example, daycare. We can see that the wait list for childcare has been rising in recent years, and Japanese public spending on child support has been quite low by international standards. We also think there are some tax and pension characteristics that provide large disincentives for women to work. Spouses earning below about $10,000 a year receive quite significant tax and pension benefits, and as indicated on the right-hand side, women's earnings actually bunch right around that threshold for those benefits. So it's possible that reducing or removing those benefits for spouses below the threshold could increase labor force participation, especially in low-income households, and that would have a kind of added benefit of being positive from a fiscal point of view. Probably the most important factor and the hardest one to get at in a way is the two-track employment system. In Japan, as many of you know better than me, there's really a two-track choice that is often made at the beginning of one's career, either to enter into the career track or the sort of regular employment, or the non-career track or the non-regular employment, with the former having higher wages, much stronger protection, more training, higher productivity, better chances for advancement. And these data are quite striking. Japan, only about 6% of managers in 2009 in Japan were women. The gender gap in wages is among the highest in the world, and so women tend to predominate in the non-career tracks, and therefore have less attachment to the labor force. And then when they leave temporarily to have children, they often don't make it back, and that goes back to the point I made about the participation rate among young and slightly less young women. Actually, the share of non-regular workers has been rising steadily. You can see in this chart that almost all the growth in employment in recent years has been among non-regular workers. This is not just an issue for women. This is a broader issue. It speaks to problems with productivity, because non-regular workers tend to be less productive. They don't receive training. They have less attachment to the workforce, and they also it's also an issue, of course, for having growth be inclusive and benefit all. This just emphasizes the point I just made. It shows the relationship between productivity in particular sectors and the share of non-regular workers in that sector. Of course, this doesn't say anything about causality, but it's at least striking that in those sectors where productivity growth is lowest, the share of non-regular workers is highest. There have been some studies in Europe, for example in Spain, that suggest that the decline in labor productivity over time is to a significant degree reflective of increased labor market duality. So just a few options for reform that we've put forward. One is to have a single employment contract to get rid of this this duality of the labor market with two groups of workers treated in very different fashions, which, among other things, is limiting female labor force participation, to have some contract in between the two current models of employment, or to move toward what's called the flex security model, something along the lines that we see in Denmark, where workers have sort of less protection in their particular job, but a stronger safety net and more training and better ability to move between jobs. That might be attractive for Japan, given that it's going through a major transformation, but it also costs money and would need to be balanced with other fiscal requirements. And this is just a leaflet that was handed to us, to my colleagues and I, when we were in Tokyo. It basically says what labor reform, and talks about, workers being fired at will and expropriated. And so just to point out that this is a very contentious issue, but I think it's maybe unfortunate that it's been put in terms of making it easier to fire people rather than bring forward some of the issues that I had just talked about.
Dr. Schiff, I'm afraid I'm going to have to cut you off.
That's okay, I was done. Perfect. Yep.
Okay, last but not least, Imamura-san.
Thank you very much. Thank you. Kind introduction. I'm Takashi Imamura, Small Bay American Corporation's Vice President, then General Manager of Washington office. I think I am the only panelist who experienced Japan's deflations. Japan has been in deflation for the past 15 years. I almost spent the 2/3 of almost 10 years in Japan, such deflations. The moderate but persistent deflation in Japan was not devastating, but seemingly affordable in the short run. If you could visit Japan or visit Tokyo, I think so you could enjoy the delicious dinner in very clean restaurants. It costs only less than $50 with delicious, with comfortable service without gratuity. But this indicates how Japanese economy struggles the deflations. It reflects the low wage of the service sectors, and also the very strong deflationary expectation of the customers, as consumers, and the corporate sides. But this deflation has deprived Japan's economic vitality and so distorted the economic structure in the long run, I also think. Despite the Bank of Japan has kept a zero interest rate policy, the deflation puts upward pressure on real interest rates. Thus, in a state of deflation, Japanese business sector learns that the active risk taking has been inadvisable. Wait and see has been the best bet for the Japanese firms under the deflations. Thus, Japanese non-financial business sector held $2.3 trillion, nearly 50% of Japan's GDP, as a cash. This obvious excess liquidity has not caused any inflation, but became the consequence of the stagnation in Japanese business sectors. Prolonged deflation has also deprived Japanese firms of their confidence and let them recognize persistent deflationary expectations. Although Japan's economy recovered and Japanese firms recovered sound profits, improved their productivities, and saved enough cash between 2003 and 2007, they avoided the pay raises as a whole. It means that persistent deflationary expectation distorted Japan's economic cycle. To make matters worse, Lehman shock happened just after this cycles. So Japan's weak economic recovery without pay raise causes very tough condition of Japan. In such a situation, persistent deflationary expectations have become entrenched among Japanese people. Even Japanese labor unions have forgotten to demand higher wage. Stagnation in wage reflection in deflation in service sectors. This vicious circle and so deteriorated deflationary pressures deprived Japan's economy of resistance. Other advanced economies also face the external shock like Lehman shocks, falling populations, and so competition with cheap labor and goods in emerging countries like China, like former China. But most of them could avoid deflation. Only Japan was forced worsening deflation and its expectations by same factors. Rather, Japan's deflation became even more complex by these factors. Where does this complicated deflation came from? Now I think persistent deflationary expectation is the most significant source, I think. But Bank of Japan changed as many of them mentioned that Abenomics. Bank of Japan and the administration have to change the persistent deflationary expectation of Japan business and household. The so-called the first arrow of Abenomics, aggressive monetary policy, was appropriate, I think. The Bank of Japan introduced as quantitative and qualitative monetary easing QQE in April. BOJ's clear commitment to achieving the 2% price stability target in a stable manner as soon as possible to underpin the determination by declaring that there would be a doubling in 2 years of the monetary base the BOJ provides. BOJ's latest outlook report indicated that the core CPI should be 1.9% in fiscal year 2015. The relative stability in the outlook suggests that the BOJ members' confidence and also Governor Kuroda appeared to be confident about achieving target in the recent press conference and many meetings in Washington last month. I think current BOJ could achieve their target only from strong domestic demand recovery path. That is something difficult path. If Prime Minister Abe started Abenomics in his first administration in 2006, there might be additional path. It is export-driven recovery by using the aggressive monetary policy with significant depreciation of the yen. However, this path is not feasible at this time, both politically and economically in U.S. side. U.S. Treasury Department recently issued its semi-annual current report, and so the Treasury Department looks like Germany's export-led growth models. And so I heard that in TPP negotiations, many congressmen strongly recommend USTR to introduce the so-called exchange manipulation such as on. So this path we could not expect. And so regarding strong domestic demand recovery path, I think higher wage regarding as the key factor for achieving sustainable 2% inflation. However, recent wage and income data remain weak. Thus, I think the target will be unclear to achieve in the near future. But there are some hopes. The current government, business, and labor union discussion or negotiation showed some signs of wage recovery in next year. I also myself strongly expect our company's chairman or the president will attend this meeting and announce the wage raise. But unfortunately, such a good news I never heard. But I also expect the progress. But we also recognize that wage or income-led recovery in the early stage of the economic recovery is not unusual. And so I strongly support the current efforts by BOJ and Abenomics to overcome deflations. But on the other hand, I could not sweep away my concern whether the Abenomics policy measures are enough to eliminate deflationary expectations from households and businesses. I am expecting success of the Abenomics. However, I also have concern that it may be too late. The reason of my concern is current Japan's fiscal conditions. My core issue is that current fiscal conditions. The worst fiscal condition in advanced economy, as this chart showed, I thought that Japan's deflation was moderate, but fiscal policy might complement its aggregated demand, I think. If the stance of the Japanese government was similar to Germany or the United States since 2011, Japanese economic situation should be worse. GDP gap should be bigger, and so deflation should be far worse. It means that moderate deflation was achieved in exchange for deterioration in fiscal conditions. Japan's general government financial deficit, this chart shows us 2012 was almost 10% of GDP. Both US and Euro areas deficit was decreased, but Japan ones are expanded. Of course, it was due to the supplementary budget to help the reconstruction from the 2011 Great East Japan earthquake and necessary. However, the accumulation of big fiscal deficit in the last 15 years was reflected in the huge Japan's government financial liabilities. 2012, almost 136%. U.S. liability, one of the causes of the recent government shutdown and the difficult debt ceiling negotiations, was still only 87%. Far smaller than Japan. And despite huge amount of Japan's government debt, its interest payments are limited because of very low interest rate under the deflation. However, if Abenomics and BOJ's aggressive monetary policy success and the Japanese economy return to normal conditions, interest rate of Japan's government bond should rise and the interest payment by Japanese government should increase significantly. If Abenomics started in the first Abe administration, the debt size was, in 2006 chart shows, only 81%. It was high, but compared with 2012 or 2013, still manageable, I think. Well, manageable, I think. So, although Abenomics started from this year, Abe administration had to decide to raise consumption tax in next April from 5% to 8%. To big fiscal deficit and so debt asked the Japanese administration to raise tax rate and accept the deflationary impact from tax increase. Japanese government has to accommodate this significant complex situation and could not postpone the reform further. Japan's fiscal condition should be more complicated in the near future in terms of the size of the fiscal expenditure. Next chart shows. The pace of increase in the social security spending should accelerate in years to come. On the other hand, the size of Japan's government revenue is within the range of the small government. This difference, so big or medium-sized government in terms of outlays and small government in terms of revenues, very small, very close to the U.S. size, it's something headway for Japanese economy. If Japanese ruling party could import the policy framework on the ideology from Republican in U.S., they could cut outlays drastically. Also, if some Republicans concerned the situations, I would strongly recommend them to move to Japan and so making Japan Republican parties. So, but unfortunately, I could not expect. So it should be impossible to not feasible due to the number of all the constituents in Japan. Thus, we have to accept additional tax increase in the near future. Japan has to achieve both growth and lower debt. The Japanese government was compelled to challenge these difficult and complicated policy objects. If the government started Abenomics 7 years ago, the challenge level should be easier, I think. But we could not return to 7 years ago. So Abenomics, the third arrows, as two of them mentioned, growth strategy should be the policy measures to achieve both growth and lower debt, I think. However, we could not expect immediate results from most of the current concrete measures under discussion in the administrations. Prime Minister Abe told his government's growth plan forecast that the 2% increase in productivity over the mid to long term will produce in 10 years, decade, an average of 2% in real GDP growth and 3% in nominal GDP growth. However, we could not link these numerical goals and so concrete policy ideas just showed. Strategic special zones to eliminate slums through the regulatory women mix, such as sets a goal of boosting women's workforce participation from the current 68% to 73% by the year 2020. And agricultural reform. I think most of the ideas are necessary for Japan to sustain dynamic society and so sustainable growth and through productivity to overcome the negative impact from the protracted decrease in their populations. However, I'm concerned that many ideas still focus on domestic demand. Despite the Japanese population must decrease and could not reverse its trend by these measures, I think the impact of the shrinking population should be far bigger than its pace to Japanese businesses. For example, in case of the company who have the business in overseas, there's internal competition between the domestic demand business and the overseas business, which is profitable. Now the deflationary pressures in the domestic demand business means that low profitability in the domestic demand businesses, and so export-oriented business far competitive. So it means that most of the Japanese companies who have the path to the export will shift their resource from the domestic one to the exporting one already. The growth strategy also emphasizes globalization. However, I think the growth strategy should focus more on external demand. Business sector is asking Abe administration to reduce corporate tax rate to compete with foreign rivals, which paid low tax in other countries. Otherwise, they will lose their competitiveness, or they will shift their headquarters or the factory to other countries with lower tax rate. I also think reducing burden for Japanese firms should be necessary. But on the other hand, Japanese economy could not avoid increasing tax burden to reduce fiscal deficit and debt. Excess reliance on households should weaken consumption and so reflect to stagnant domestic demand. Japanese business sector also achieve both growth and reward. It's still tough challenge. But I think if Japan could achieve sustainable growth by these challenges, Japan's evolution from the 1990s to now should be a great lesson for all advanced economies, including US. Japan's many challenges such as aging problems, excess dependence in fiscal policy, and losing competitiveness by emerging countries catch up should be common in advanced economies. So I expect Japan acquires a leading role and the model as maturing and aging but sustain vitality in the world. From that perspective, US could find new opportunity to invest in Japan. Thank you.
Thank you. Thank you, Imamura-san. Thank you, Dr. Schiff. Thank you, Adam. We've got about 15 or so minutes for questions. The ground rules for questions are as follows. No filibustering from the floor. They're up here, you're out there, sorry. So keep the questions short and sweet and direct. I'm the moderator, however, so I get to ask the first one. One of the things that wasn't mentioned in the context of the third arrow, and perhaps this is the third rail of the third arrow, is agricultural reform. Now, I don't want to steal thunder from Jeff and the others in the next panel, but there are huge domestic implications to that. Would anyone care to comment on domestic agricultural reforms?
Well, I certainly agree that agricultural reform is critical in Japan, as is deregulation in other sectors. I'm not sure if it would have such a huge direct macroeconomic effect, but it will have a very large signaling effect that this government is willing to take on some of the interests that others had not. I'm not sure exactly what will come out of the current parliamentary round, but one thing that we understand probably would be some measures that would allow leasing of larger plots of land, say to private corporate interests or to people who want to farm larger plots of land. We think that's actually a pretty important measure potentially. We've done a little work and we found that productivity in agriculture in Japan, if we look across prefectures, depends quite a bit on the size of the farms. So we think that there's one piece of the puzzle, but there are obviously many other issues that will need to be addressed.
Okay, thank you. Imamura-san?
Yes. So average farmers' age is very close to the 70s. That it means if we could not reform by next decades, Japanese agricultural sector faces very severe conditions. But every agricultural sectors understand current situation, and so the recent newspapers and so the policy suggests that there should be reform into the production of the rices, and also some good signs came from between our trading company and agricultural organizations. Some of the agricultural organizations looking for the opportunity exporting the Japanese agricultural goods. So asking the trading company to consulting to where to how could they export. So this means such as show signs of the reform, I think.
Okay. Thanks. Okay, now we'll open it to the floor. Raise your hand, please state your affiliation and ask a question.
Just people towards the back can go to the standing mic. People towards the front, the roving mic will get to you.
Okay. Dr. Bergsten.
Fred Bergsten from the Peterson Institute. I want to pick up on a point Mr. Imamura made and ask it to all the panelists. As Japan looks for new sources of growth, why not, as he suggested, focus on expanding the export share of the economy? Contrary to public opinion, widespread opinion, Japan's export share is the lowest of all the high-income countries. A very closed economy in that sense. So one would think a prospect, a possibility, particularly given the high competitiveness of many of Japanese firms, would be to expand the share of exports in the economy by several percentage points. That would provide an impetus to growth, certainly in a transition period, and maybe a more sustainable long-run position. Is that being seriously thought about? Is that part of the Abe program? Are there policy measures you can think of that would promote that? What about that as a component of the new strategy to restore a more vibrant Japanese economy longer run?
Adam?
As usual, there is no one opinion in the Peterson Institute. I think there's two issues with that. I think I want to pick up on what Fred said. He's absolutely right that the perception both in Japan and abroad of them as the export powerhouse and export dependent is somewhat odd given the limited export share of the Japanese economy. And as I think it was Jerry pointed out, investment so far, even after the yen fall in the last year and a half or so, has been focused primarily in non-manufacturing domestic firms. It hasn't been focused in the export sector. Now, in a sense, that makes sense because there's such inefficiencies in some of the domestic service industries as opposed to, say, a Toyota. So I think that's right. But I think, and this goes back to all the work the Institute does on trade and trade liberalization, that the big numbers come from what that does in terms of making the economy more efficient and more competitive. What international integration does. By analogy, what mattered for Spain, for Portugal entering the EU, I don't mean entering the euro, entering the EU and the single market was what it did for productivity and costs and not so much huge export gains. So the problem with that, so I think this is why I put the title in the program, From Trade to International Integration. I think we do want a Japan that targets a higher export share and a higher import share because we want a Japan that is more towards integrated with the global economy for its own sake. But in a Japan where demographics are pushing down on domestic savings steadily, it's hard to imagine that their current account doesn't on average erode over the next several years. And in a world where, as you've spoken about so eloquently, Fred, as has our colleague Joe Gagnon, where a world in recession, people grabbing export share are grabbing jobs out of other people's mouths. I don't think an export push by Japan right now is really the issue.
Any others?
Yeah.
Jerry?
Well, maybe just to add one or two points to that. I mean, I think one thing we see happening in Japan, as in many other advanced economies, is an increase in outward foreign direct investment from quite low levels. So Mr. Imamura can speak to this, but many corporates want to move abroad, especially, say, to Asian large emerging markets, because they want to be near where they see the future of demand. And so I think that's going to affect the sort of trade patterns and maybe make it hard to see very large increases in exports, even while we're seeing more integration in a broader sense. But we may see more on the services side. We're already seeing Japanese banks increasingly moving back abroad, partly taking advantage of European banks deleveraging. So we may see increased trade and services in that sense.
Imamura-san, any comment?
Yes, I would like to add one comment. So, increasing the exporting share is also important, but we have to think about the constraints energies, so electricity. So it means that not only increase the share, but also we have to also increase the import shares, and so it means that shifting from the domestic production to the import and to allocate from such area to the exporting sectors, and it means that such an exporting sector should be the more high productivity area. So it contributes to the increase in the whole productivity in Japan, I think.
Thank you. Okay, to the floor.
Okay, I'm Arthur Alexander from Georgetown. Adam, I want to bring back an argument of yours from maybe 10 years ago, reuse it. Then you had argued that various kinds of economic reforms, although good for productivity and spurts of growth, were not necessary because Japan had gone through a whole history of economic development and growth without those reforms. And that we could, with proper macroeconomic and monetary policies, continue on a growth path that was satisfactory. Can we do that today? Has something changed so that real serious reforms, deregulation in various sectors are absolutely necessary? Or if we get the macroeconomic and monetary policies correct, can we get back onto a satisfactory growth trajectory?
Thank you, Arthur. It's kind of you to remember we were both on this a while ago. Let me explain a little bit about what I said, I guess, roughly 10 years ago. You've sort of got what I said. What I said was, in a context where there were people from the Japanese government as well as outside commentators saying, oh, the potential growth rate in Japan is only 0.5% or is less than 1%. Therefore, we can't do anything on macro policy. We have to do structural reform. I replied, the underlying growth rate, the potential growth rate in Japan was around 2, and therefore you didn't absolutely need structural reform in order to get growth back up. Macro was enough. And that was specific to the context, and I would argue that the experience of Japan from 2002 to 2008, basically from the Koizumi Takanaka reforms and macro corrections, including the banking system recap, until the global economic crisis demonstrated that my higher estimates were right. So then it's legitimate for you to say, Arthur, why am I or others now pushing structural reform? I think there's two quick answers. The first is, as even I, the supposed ultra-Keynesian dove, says, and have said repeatedly, it does matter when debt to GDP is 150% instead of 90%. Full stop. You do have to pay more attention to it. And second, that more is better. There is no, you and I and many others have been talking about the kinds of labor market reforms, the kinds of trade reforms for a very long time. And there's no reason they shouldn't do them. It's just I was fighting this issue that I didn't want people to give up on short-term growth and claim that Japan couldn't grow absent radical reforms. But I still think Japan can improve its growth rate through constructive reforms, and the fiscal situation makes it more important now than it was 10 years ago.
Thank you. Additional comments? Okay. Questions? We got about 5 minutes.
We couldn't have been that uncontroversial. Yes, I see someone at the back. Sorry, I'm used to chairing. Sorry, Jim.
Yeah, that's okay. You run the place.
No, you're gracious. Sorry.
I'm Shihoka Goto with the Wilson Center. I actually have two questions for Mr. Imamura. And I was particularly struck by Dr. Peterson and Dr. Schiff's emphasis on the importance of female empowerment in the workplace in Japan. Do you agree with their assessment or not? Secondly, my personal view is that Womanomics is a terrible branding name, that the challenges ahead for Japan is much broader in terms of labor market reform, and that there needs to be greater flexibility in the workplace, which is important for both men as well as women. If you do agree with that assessment, as a very senior person at a leading Japanese trading company that is one of the biggest blue chip companies, what do you think can be done by your organization and your rival companies, and what's actually being discussed at the moment? Thank you.
Thank you. Very tough questions.
Thank you very much, Imamura-san, for agreeing to speak. Thank you very much.
Yeah. I strongly agreed with both two panelists, and so that reform is necessary. But as I said, is that the meaning is it is difficult to link the recent growth rate to such reform. Why I said is that in case of these countries, so in U.S. also the women mix occurred in the 60s and 70s, yeah, and so the labor participation rate was increased in that decades. But what happened? If you look at the men's labor participation rate, for example, 25 to 54. The many people have to work in working age. It's also decreasing. So it means that, of course, there in growth, there's additional demand occurs, but there should be some substitute. And so, but this is not meaning that I will not recommend. I will strongly recommend. And so in case of Japanese companies, recent 5 or 6 years, diversification is keyword, and become so they prepare so daycare services in internal business company or provide the cafeteria menu such as on to all the employees some of the companies. I think so. If the Abenomics success and so economy turn to recovery, Japan's current situation means lack of the labor force. So it means that so the company it could not prepare the goods for such a conditions, could not collect hire so talented people. In Japan, so many people say that's so-called black kyo, black corporation, the very cheap labor, and so for the average age is very young generation. That such a company will disappear if the Abenomics success. And so all the reform, like including the womenomics, it's the one necessary path to become the Japanese matured but the vital economy. So we could gain. Thank you.
I think we're out of time, so I want to thank all of the panelists. I just want to see if we come away from this with the same general understanding. Everyone seems to be optimistic that policy is lined in a way that's moving things in a positive direction. Critical steps still to come, both on the fiscal consolidation side over the near term, but also particularly on the third arrow measures. Is that all fair to say in summary? I think so. Okay. Thank you very much for your participation. Thank you for your questions.
Thank you all. Just to say, we're going to take a roughly 10-minute coffee break and then come back for our panel on trade and reform featuring Jeff Schott, Wendy Cutler, and Professor Watanabe. So thank you very much.